and gentlemen, good day and welcome to Ganesha Ecosphere Ltd. Q1 FY2024 earnings conference call hosted by Antique Stock Broking Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star 0 on your touchtone phone. Please note that this conference is being recorded. Now hand the conference over to Mr. Manish Mahawar from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Neerav. On behalf of Antique Stock Broking, I would like to welcome all the participants on the call of Ganesha Ecosphere. Today, we have Mr. Yash Sharma, Director of Ganesha Ecosphere, Mr. Gopal Agarwal, CFO, and Mr. Prashant Khandelwal, Senior Vice President from the management. Now, I would like to hand over the call to Mr. Agarwal for opening remarks, post which we will open the floor for Q&A. Thank you, and over to Mr. Agarwal.
Thank you, Manish and Antique Stock Broking for hosting us. Thanks to all the participants for taking the time to join us today, and on behalf of Ganesha Ecosphere, I extend a warm welcome to all of you at the company's first earnings conference call of FY2024. I hope all of you might have had a chance to look into our quarterly numbers and investor presentations already available on the exchanges. Textile sector is amongst the hit due to downturn in western world persisting since last 15 months. Exports of textile sector is constantly declining. During June 23 quarter, shipments of man-made products saw a 17.2% decline. Slowdown in Europe and US prompted the dumping from China and domestic market, which led to a demand and pricing pressure on domestic suppliers. Prices of yarn and fiber slided and affected the textile industry top and bottom line. Yarn spinning sector is major contributor to our revenues. We had to face the heat, which came to us in the form of lower demand as well as drop prices. On a standalone basis, during June quarter of FY2024, company's production volume was at 27,030 tons. Sales volume was declined by 8.6% to 24,687 metric tons, as against the sale volume of 27,241 metric tons achieved during Q1 FY23. The average sales price also declined by 17% during the period. Revenue from operations during the quarter came at rupees 231.82 crore, which is down by 21% from corresponding last quarter. Due to slowdown in export markets, company's exports were also hit, and it made an export sale of 18.02 crore as against 63.94 crore during June 22 quarter. Due to lower volumes and slide in prices during the quarter, our EBITDA margins came down to 7.4% as against 9.4% during corresponding last quarter and 11.4% achieved during FY2023. In absolute terms, EBITDA during the quarter was 17.18 crore. But an EBITDA dropped to 6,355 as against 9,921 during the corresponding last quarter. Company incurred an inventory loss of 5 crore during the quarter. Raw material prices were adjusted downward in comparison to corresponding last quarter, but pace was not aligned with fall in sale prices. All the above factors resulted into drop of profit after tax to 11.61 crore. On group level, though some of the product lines were commercially operational during last quarter, March 23 and June 23 quarter, ramp-up could not happen as expected. BIS standard for consumption of rPET granules in food packaging was notified during May 23, which we were expecting much earlier. Our product testing and trials at plant level also took more than expected time period due to various complexities involved in audits and approvals. Global and domestic slowdown in demand also contributed in slower ramp-up of production volume. Capacity utilization was at around 50% in Warangal facilities, but sales volume were at even more lower level. Nepal facilities was ramped up, albeit at slower pace, and it reached to 50% capacity utilization level during the quarter. So on consolidated level, PAT was dropped to 3.4 during Q1 FY2024. Major contributing factors in drop in PAT at console level is interest and depreciation of subsidiaries, which could not be offset due to lower level of operation. So this is from operational angle. Now I hand over the call to Mr. Yash for his comments on the operations of the company.
Thanks, Concall, and I extend my warm welcome to all the participants here. This quarter was not as per our expectations due to the reasons explained by Gopal very well. In fact, we have not seen such a gloomy market environment in the last several quarters now. However, the dust now looks settled, and the demand and prices have already seen some revival since start of July 23. We are expecting to do quite better in the second quarter on standalone basis. And in view of the festive season and other contributing factors, we are hopeful to operate at normal level from Q3 onwards as we were doing in the past. In the rPET bottle-to-bottle grade chips, we have finally got our much-awaited first order from one of the Coca-Cola's bottlers, and things have started rolling out with more orders lined up on cards. We are very close to getting final approvals from many other brands and hopefully, getting onboarded with them in the coming quarter. One more production line of bottle-to-bottle chips is to be installed in our Warangal facility by October-November 2023, and it is expected to start contributing from the last quarter of FY24. FDY production line is also streamlining, and we are expecting to get better results from Q3 onwards. Staple fiber line is going to start its operations from September onwards, and since it's our existing product, we expect to see the results and utilization coming up from next quarter onwards. To conclude, we are still very optimistic in enjoying the fruits of our Warangal investments from FY25. All operations are also expected to be aligned by the end of current quarter, and we feel that we should be able to achieve 75 to 80% utilization levels by the end of this quarter. So this is all from our side, and we are very thankful for your kind attention. We would now like to open the floor for any questions that you may have. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the telephone. If you wish to remove yourself from the question queue, you can press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask the question. First question is from the line of Gunjan Baba from Ganesha. Please go ahead.
Hi, sir. Thank you for the opportunity. One thing I wanted to understand is that we have got an approval from Moon Beverages. So I wanted to understand how does this approval system work, because Coca-Cola FCCB has their own bottling plant if they want to divest it. So there are too many bottlers like maybe Nani Group, or there's a bottler in South also. There are too many bottlers as well apart from this. So do we have to take approval from all, or will get this order, and what's the scope of size that we can expect from them going forward? I mean, how will it ramp up, and are we just trying for Coca-Cola India, or we are expected to go global and get approval from the other countries as well?
So I'll take this question. So Gunjan, basically, Coca-Cola approval happens from the global side. So our trials and everything that is happening on the global side, and it's handled by Coca-Cola Atlanta. So once we get the approvals, we get the approvals to supply to any of the partners in the Coca-Cola system. That is number one. The approval that we have now got from Moon Beverages, it's not an approval. It's basically a first commercial order that Coca-Cola has lined up, that because apparently they will be the ones to launch the first rPET bottle of Coca-Cola very, very soon. Discussions with other bottlers are also parallelly going on, and every bottler is coming up with their strategy for using rPET in certain SKUs and certain products in coordination with the Coca-Cola centralized OU team. For now, we are basically in discussions with all the bottlers of Coca-Cola starting the ramp of rPET. About the volumes, we cannot really disclose how much volumes Coca-Cola might be committing us for this year. They are still analyzing their strategies, and they are starting to commercially ramp up their rPET usage from next month onwards.
Okay. So are the margins will differ with respect to Coca-Cola and other bottlers, or is it expected to remain the same?
Yeah, the margins we are expecting is better than our existing business from our R&D business.
Okay. So also consolidated operating margins were at 10% and standalone was at 7.4%. So incremental revenue in the consolidated business has not been that high compared to what margin uptick we could see. So if you can say what has happened, or is it because of the Nepal plant that has been operationalized, or how is it?
So basically, the inter corporate functions among the group companies are not part of the revenue from operations in the consolidated results. That's why the turnover which is in between the Nepal unit and the Indian counterpart of our Ganesha Ecosphere, as well as the sales from the Ganesha Ecotech has been knocked out from the results in consolidated basis. That's why the turnover is lower. Of course, their margins are coming in the final reports.
Sir, going forward, can we expect some more raw material inventory loss in the coming quarter as well, because tap bottle prices along with finished goods have been decreasing, or has it been normalized?
Yeah, basically the inventory loss is on finished goods and the processed stock. It is not on the raw material front. So given we feel that the prices have bottomed out in the Q1, so in Q2 we are not looking for any inventory loss, great inventory loss.
Okay. Last question. Considering the current slow business environment, so and you know the recycled dynamics work a little different with respect to virgin fibers. So I wanted to understand how much margin can we expect in bottle-to-bottle and filament yarn in near term. Just wanted to understand the volatility in a down scenario versus the up scenario for recycled material. So are we like what kind of from a very good market we are expecting around 20% EBITDA margin kind of a business, and in the slow at the term how much margin can we expect in this segment is what I wanted to understand.
You see, the ramp up in the capacity is going slowly. It is not at a very fast pace. So in the near terms, the cost is higher. And so though we see the good margins of about 17-18% EBITDA level, but due to the lower level operations, it might not turn up great in next 1 or 2 quarters. So it may be 15% plus kind of margins we may see in the quarter 2 or quarter 3.
Okay. Irrespective of the capacity, I'm just trying to understand product-wise, if you know, in a very good market in bottle-to-bottle for filament yarn, if you're expecting around 20 to 25% EBITDA margin, then in a down scenario, what kind of margins can we expect in RPSF or filament yarn is what I wanted to understand. Irrespective of the ramp-up, I understand that if the capacity is coming online and ramp-up is not happening at the same rate, there would be a certain expenses, but just the project I wanted to understand the market dynamics.
So even in the down scenario, we in PSF business we are hopeful for getting on track by Q3, and 10% plus EBITDA margins would be there in the PSF business. And for the bottle-to-bottle and the POI business, we are looking for the margins of 17-18% at EBITDA level.
Okay. Okay, sir, I'll get back to you. Thank you so much and good luck to both of you.
Thank you. The question is from the line of Harsha from Dalal & Broacha. Please go ahead.
Yeah, thanks for the opportunity. Continuing with the previous participant question, you did answer that the EBITDA margins for the B2B chips would be say somewhere around 17-18%, but currently you are the only player who has this capacity. Say, so what I'm trying to ask is, say in the next couple of years or 2-3 years down the line, could it be a scenario wherein the margins in the B2B chips would kind of get compressed, because I believe players would definitely be entering into this space, and the clients that we are dealing with are much larger in size, so they would be having a higher bargaining power and even more suppliers.
You see, the rPET consumption is mandated by the regulations that will start from the FY2025 onwards. And the government regulations has mandated for the 30% consumption in the very first year, which will be kind of to 60% by 28. So, given the size and demand of the recycle would be great, and we expect by 29 to be, by FY29, FY30, the demand of rPET would be in the bracket of 0.9 to 1 million ton. So that is a great demand, and we don't think there would be any pricing pressure because of the size of the market which is going to be created in this space.
Okay. And one related question to the recent order that you got from Moon Beverages. So can we expect the revenue to flow from Q2 onwards or something later than that?
So you see, in Q2 the much revenue would not come, but the much revenue would come from Q3 onwards.
Okay. And I believe you have just come out with a press release saying that you have added capacity, right? You will be adding capacity of close to 12,000 metric tons per annum. So I believe that the existing capacity that you have of the same size, so you are expecting full utilization in FY24?
Yeah, we are expecting we would be able to utilize the 80-90% capacity utilization in the first quarter which we are having with us now by Q4.
Okay. Can you give any broad range on the realization of these B2B chips?
It depends upon the market and basically the prices margins which also play a role. So you can see the broader range from 95 to 105, 110 level, depending upon the scenario of the margin chips and other contributing factors.
Okay. Thanks for the explanation. That's it from my side.
Thank you. Participants, you may press star and one to ask a question. Next question is from the line of Ganesha Ecosphere Ltd. Please go ahead.
Yes, thank you for the opportunity. The first question is with regards to if you can just help us with the revenue for the quarter in the trading and yarn business.
Sorry, can you please repeat the question? I couldn't.
I was asking about the revenue for the quarter in the trading and yarn business.
Yeah. So the mix of the revenue is about 85% from the fiber business and 50% from the yarn business.
Okay, understood. So secondly, on the capacity expansion, so we will be adding a line by October, November this year, 12,000 tons, and we are expecting the current capacity to be 90% utilized. So the new capacity, are we expecting full utilization of the 24,000 tons by FY25, end of FY20?
Yes, we are expecting it.
So any future plans for addition after this 24,000 tons? Maybe expect future additions in FY25, maybe increasing the capacity, adding one more line or some, any guidance on that side?
Yeah, we are considering to adding some more capacity, but the plan has not yet been finalized. So we will come back to you after we finalize the plan for adding the further capacities.
How much land would we have after this October capacity addition at the South plant?
Yeah, at the existing plant we can add 2-3 more lines.
Okay. So the South plant, if we add 3 more lines, the B2B capacity can increase to approximately 50,000 tons.
Right.
Okay. And are we not looking at any geographical diversification apart from the South plant once we exhaust, assuming you announce some capacity addition in 2026, will we see any new capacity outside South India, any geographical diversification plans?
Yes, we are discussing for various opportunities and various geographies. It depends on our tie-up with the brands where their consumption plants are situated, where the more quantity can be sold in which part of the country. It was logistic and concentration of the brands, concentration of the customers. So it depends on that.
Okay, just one last question. If you can just help us with some flavor on how is bottle-to-bottle market in terms of end consumer, where is more demand? Is it north-centric, is it south-centric? If any color on that front.
Yeah, in fact, yes, can very well answer this question.
Sorry, can you please repeat your question?
Yeah, I just want to understand where is the end consumer market with regards to CSD or bottle we are targeting. Is it more towards the north or spread out across India? Any color?
So actually, I mean, if you look at the Coca-Cola market, it's spread out across India. So a lot of bottled water consumption happens in the south of India. So South India consumes almost 40 to 45% of bottled beverages in any given year because of the temperature profile, the weather profile, and and non-availability of potable water. So, but yes, I mean, all across India, water consumption is quite high. So. Yeah.
Okay, I have a more question if I can just ask that. So right now we heard about Kinley and Pepsi coming out with recycled products in select markets for this SKUs. Right, so they might have sold the rPET from some other supplier, or was it imported? Do you have any update on that? If you can just highlight, help us with that.
So
yeah, please go ahead. Yes, please go ahead.
Yeah, so basically, yes, you're right. So Coca-Cola has already launched Kinley and Pepsi has also launched Pepsi Black. So obviously, they are trying to launch as many products as possible with rPET consumption, and currently they sourced it from some other suppliers, both imported as well as one another local supplier as well. And we are also expecting to launch very soon with both of them as well.
Understood. So will we, just a follow-up on that, will we have some pricing pressure going forward from the imported products in India, or that does not change our pricing dynamics going forward?
No, not really. Actually, what the input that we have is that the imported material is even more expensive. So not really.
That's helpful. I'll come back in the queue for more questions. Thank you.
Thank you. Next question is from the line of Harsh Jawar from Ocean Dial. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity, sir. I wanted clarification on the booking. So you mentioned
your voice is not coming clear.
Hello, is it better now? Yeah. So, yeah, sir, I wanted a clarification on the margins you mentioned for bottle-to-bottle of 17 to 18%. So, is it the margins for FY24, or you're saying this business will have long-term margins of 17 to 18%?
No, basically, this is the margins for the start with in the Indian market. So we are expecting the margins will go up as and when we go nearer to the right time when the regulations come up. So because all the brands and everybody will start with the consumption of rPET as of now, they are not in a position to because the rPET is costlier than the virgin chips. So they have to adjust everything as of now. So at the pricing front, they are a little bit compensative for giving the higher prices as of now. So we are thinking so going forward as the product stabilizes, as the supply chain stabilizes, and as the ramp up of the rPET increases to match with the regulations, to comply with the regulations, prices and margins to go up.
Okay. Sir, are we also exploring opportunities with Coca-Cola in bottle-to-bottle?
Definitely, yes. So we'll get the approvals for full consumption, but it really depends on, where they want to ramp up their rPET usage. So that is something that will play out in the coming years, because even the regulation in Europe kicks in from 2025 onwards. So we are already in discussions with some, partners in Europe as well, but it's all gonna play out eventually as the regulations come closer.
And the realization would be higher in case of export, and margin will be higher in case of export, bottle to bottle?
This is something that we really have to see as the markets evolve. Because currently the markets are still in a very, very nascent stage. The markets are evolving. The product capacities, qualities are all evolving. So that is something that only the market can tell us with time.
Okay. And then my last question on PSF pricing. So you said that things have bottomed out and it is starting to look up now. So where do we see these prices stabilizing?
Actually, the pricing depends on various factors. Presently, the prices were hit because of the global scenario where the exports to the Western world has come down heavily, and something from China is also there. So there are pressure on the pricing. You see the prices have also come down. Prices of the Concall had also come down. So all these factors played a role. But going forward, we have seen such demand is reviving in the latter part of the last month, and so prices have also started to look up. But all depends on the demand side, how it ramp up in the coming quarters. So definitely we are seeing that the bottom has come out. How much prices will go up, it depends on the demand and supply scenario.
But will we be able to maintain our gross profit kg number?
Yeah, in the last quarter we could not, but yeah, of course in the coming quarter, in the current quarter and the coming quarter we see we will be able to maintain our gross margin.
Okay. Thank you, sir.
Thank you so much. Next question is from the line of Dhruv Bhatia from Bank of India Investment Management. Please go ahead.
Hi, good afternoon, sir. So I have
Dhruv, you're not audible. Can you please come a little closer towards the phone?
Hello. Good afternoon, sir.
Good afternoon.
One clarification is that for the rPET, your current capacity that you have put up is 15,000 tons, and the addition that you're doing is 12,000 tons. Is that correct?
Actually, to be precise, the start capacity of 1,400 tons for the line as per the rated capacity from the supplier. But with our experience, we got it and with the Indian material, Indian raw material and everything, we found it with the practical capacity, the practical production which can be 12,000 only. So that's why we have informed the 12,000 capacity. Actually, the line is same. Rated capacity is also 14,400 tons, but the actual capacity is 12,000 tons. Looking to the raw material of the Indian market.
And so you're saying basically the nameplate capacity is 12,000 tons, but you can probably assess achieve 14,400 tons.
I don't think we can achieve the 14,400 tons. Yes, can explain it further. For the Prashant can give us a very well coverage. Prashant, please carry on with this.
Good morning. So basically, it is the bulk density of the material which controls the output of a line. So basically, in India, what is happening that we have a lot of water bottle with a very thin layer of PET. The water bottle of 1 liter weight of a 1 liter water bottle came down to 18 to 19 grams now. So if the bulk density is lower, we cannot get a higher throughput of the line. And all suppliers from Europe and US are basically working on bulk density from their region. The water bottles in Europe and US is having a thick layer, and the bulk density of their material is higher than what we are getting in India. That is why we are getting a difference capacity utilization in India for this recycling.
That's why you can say the name 14,400 tons. Practically in India we can get the production of 1,000 ton only.
We are still working on this, and I hope in coming days we will try to achieve some more production capacity out of it. Yes, for till now, this is the final capacity what we have achieved.
The new capacity which we announced today of 12,000 tons, that again is a nameplate capacity and achievable probably would be slightly lower.
No. Nameplate capacity is 14,400, but the achievable capacity is 12,000 tons.
Okay. So just to understand, so currently with 12,000 ton capacity that you have, you can do 120 crores of revenue going with 100 rupees realization, and as you mentioned, the EBITDA margin should be 17 to 18%. That's the way to think about the RPET business, right?
Yes.
Okay. And the incremental capex which we have announced today, I think the earlier one, Warangal facility overall had an incentive where, on a yearly basis you were expecting 50 to 30 crores of incentives. Does this new announced capacity for Warangal also, is it eligible for incentives?
We are approaching the government for the same. We are not yet clear will it be able to get the incentives or not.
Okay. The existing...
Because it is not a part of the original project. It is the expansion. So for the expansion, we have to approach the government.
Okay. Finally, I just want to understand, you are in discussions, you said, with other customers, for the RPET business. This is both in India as well as international at this moment, because the last time, I think, you had talked about that because from April 2025, it's compulsory 30% of the bottles have to be, has to be coming from recycled, that, you'll be focusing on domestic market. So are you looking at, focusing on domestic or both, and your conversations are you're looking at new client acquisition both in domestic and exports?
So basically the focus is on domestic, yes, because the regulation coming in India is coming on quite strong, but we are in conversations and open to working with international brands as well. So we are also having ongoing discussions and conversations with international brands as well.
Understood. And just lastly, on as the PET prices, the virgin PET prices have been falling, how should we think about, pricing and profitability for the RPET business going forward when prices fall of PET, virgin PET? So, when the gap increases, does it mean that, there is more pressure on profitability for the RPET business?
Definitely, yes. Virgin prices do put pressure on the RPET profitability and pricing as well. So, but then you have to also understand that as the virgin prices fall, our raw material prices of the scrap bottles also are kind of linked to it. They also fall along with it, which is what has been happening in the past 6-7 months as well. So definitely yes, whenever there will be a pressure on the virgin polymer prices, there will be a pressure on RPET as well.
The current realization gap would be 20%, where virgin would be 20% cheaper.
Correct.
Thank you so much, sir.
Thank you. Next question is from the line of Bhavya Gandhi from Arvind as well. Please go ahead.
Yes, thank you for the opportunity. A couple of questions from my end. If you can shed some light on the overall debt levels, long term as well as short term or long.
The mic is close to your mouth. The very sound is coming.
Sorry. Am I audible now?
Yes.
Yeah. If you can throw some light on the overall debt levels, long term as well as short term, and what is our average cost of borrowing and the repayment schedule going forward, how is it like?
Yeah, so on the solid level, we are having a total debt of about 550 crores over books, and cost-wise, we are getting the funds as of now around 8.5%, the average cost for our funds. And the repayment of the long-term loans, which is in the tune of about 750 crore, is by 32.
Okay, got it. Okay.
Yeah.
And with respect to OCF, can you share the operating cash flow number for the quarter? And do we internally look at OCF to EBITDA? Because the conversion seems to be quite low, around 16%-17% on an annualized basis. Will that, because our repayment of interest or reinvestment capability is decided on OCF. So do we internally monitor that?
Yeah, of course, the OCF is internally monitored by us.
What is it for the quarter? And if you can share that number.
Yeah, on operating front, the operating cash flow, the cash flow is the quarter is almost at par because the profitability has to be hit in the quarter, and we are in the investment mode. So hardly we hadn't got any surplus on operating front in this quarter.
Got it. And
along with the repayments,
we see a lot of private equity deals happening in the circular economy space, especially in the recycling. So do you think that the competitive intensity going forward will be increasing because a lot of players will be getting funding from different key players, and they'll get they can fund Starlinger machines and bring in some sort of pricing pressure. So any take on that?
Yeah, I think yes. You please go ahead with the question.
Definitely, yeah. So basically, as this was also discussed just back that that the market of RP that is going to be created and the demand that is coming up globally, moving forward is immense. In India, we are looking at 900,000 tons to 1 million ton of market being created by 2028. And for that matter, when we're talking about, setting up a manufacturing capability for circular economy products like this RPET bottle, it's not easy to achieve the desired qualities. That is also very practically works good, just like a virgin plastic at the performance level, the final packaging. That is something, because when you talk about big FMCG brands, they do not want to compromise at all with the quality of their packaging, because that's the point of contact with these customers, right? So definitely some capacities will come up. Some of them might not work really good, because we have seen a lot of capacities peeling outside as well, which have come up. They are not able to deliver the right product which is suitable for application by FMCG brands. We have proved our quality and capability is better than the most, so we are not facing that much of a pressure or heat in that sense. But looking at the market capacity, looking at the market demand that is coming up, the kind of capability you need to create this product is, we don't feel that we'll face any pressure from the external market.
Fair enough. And with respect to the regulation which is going to come up by FY2025, 30%, you need to have recycled bottles. Do you think that can be postponed? And who's the body governing the regulation? If you can throw some light on that, how strict would be the execution in terms of implementing the regulation? Something on that front.
Definitely.
Please. Yes.
So basically, what is happening is that when we're talking about regulation being shifted, no, it is not happening. The current understanding of the industry with the regulation is coming on. There might be a possibility that they can probably offer some kind of a leeway to the brands in terms of the amount of percentage. Like instead of 30%, they would just impose a small penalty if you are lower than 30%, and if you're higher. If you don't do it at all, then it's very huge penalty. So there's some kind of acceptable leeways are trying to be factored in, which will ease out the pressure a little bit for the first year. And when you're talking about the regulation, industry is fully promoting it, including all the FMCG brands as well are also promoting it to come online. So we don't see any shift in the regulation happening.
And yes, India is also the part of the global act in which they have to reduce the carbon by 1.5 to 2%.
Correct. So basically, it's also a part of the climate change strategy that we are already having in place. If you know that the government of India has got a huge fund from World Bank for reducing its carbon dioxide emissions, and our bottle-to-bottle chips is a big contributor to that fact, because in this polymer you are saving on your environmental impact by 60 to 70%. And that is the reason that it's being promoted very heavily and being regulated very, very soon.
Thank you. Bhavya, may I request you to come back in the question queue for a follow-up question? Thank you. This question is from the line of Vidya Sija from Goldman Sachs. Please go ahead.
Yeah, hi sir. Sir, just to understand what is the peak debt that we are looking at for the current expansions that are ongoing?
Yeah, the debt we are currently having in our books is of 550 crore. And going forward, the peak debt would not be more than 600 crore at any point of time.
Sir, can you also comment on the quarterly run rate for the depreciation for our subsidiaries? So if you look in Q1, the depreciation rate was much higher than what it was in Q4. So is it expected to continue at this level, or are we expected to see a substantial increase in that as well?
Yeah, the production lines which are started, depreciation is for that, and going forward we would be having the PSF line to be operational, and the new B2B line is to be started, so the depreciation rate will be increasing because of that.
Sir, can you give some color on quarterly run rate after, all these lines get operational by Q4?
Yeah, so on consolidated table, the current depreciation level is around 12 crore on quarterly basis. So going forward, we are looking for about 40 crore, 35 to 40 crore depreciation level at the Concall plant, and 25 to 26 crore at the parent company. So going forward, it may be around that 50 roughly on the consolidated level.
Thank you. Request to all the participants, please restrict to 2 questions per participant. Next question is from the line of Ganesha from Bank of India Mutual Fund. Please go ahead.
Hello, sir. Thank you for the opportunity. Just 2 questions. First is...
Can you please speak a little louder?
Hello, am I audible?
Yes.
Yeah. First question is regarding our recent order which we have won from Moon Beverages. The duration of this order is around 3 months. So are we expecting that we'll get short time frame orders, one after one orders, or do we expect that this short-term order will be converted into something like a long-term contract?
Actually, this is not a great quantity, but it is only from the one of the bottlers of the system. So we are looking for the orders to come from other bottlers also shortly. And currently we are not making any long-term contracts with the brands.
Okay, sir. So we are expected to have short-term contracts depending upon the pricing and volatility of.
Yeah, because just rolling on the products, so we are not going for the long-term contract, and we will make the long-term contract as and when we will see more clarity from the pricing side and things.
Understood, sir. And my second question is regarding our filament capacity. What is the utilization there in first quarter, and how are the interactions with the clients going on there, and how should it get ramped up?
The capacity part, we are operating at about 25-30% capacity at present, and we are working with various plants for POY and the bottle to filament. So the more like it, so I guess.
Definitely. So basically, it's a similar story there. So over there as well, we are undergoing a lot of approval stages with some brands. So that's going to also take a couple of months to ramp up as well.
That is very helpful, sir. That's all from me. Thank you.
Thank you. Next question is from the line of Suraj Tawandar from Sapphire Investments. Please go ahead.
Hello, sir. Good afternoon. Sir, just get a small clarification that are we approved by Coca-Cola or is it just one small trial order before we get approval?
Yeah. So basically, this is not a small trial order. This is a commercial order that we're going to execute with Coca-Cola very soon.
Okay. And sir, will there be shortage of raw material going forward from next year because there is a lot of demand from next year as the regulations change?
The regulation will come from the FY2025 exactly. Of course, the raw material, there might be some shortage of raw material because the raw material will first put the water to bottle chips and after the fulfilling the demand of the water to bottle chips, it will be for a piece of business. So going forward, it may have some pressure on the raw material availability, but going both of the PET business itself, which is growing by about 9 to 10%. So every year, about 100,000 ton raw material will also be from the system.
Okay. And I just wanted to understand the competitive advantage that for the mode that we have that no one else will come and do the same business that we do. Is it on the process side? Is it on the sourcing of raw material side? Where do we have that mode that will protect our margins going forward?
Definitely, yes. Basically, the first competitive advantage and the most major one is our sourcing capabilities because we are currently capable of sourcing around 500 tons of post-consumer waste every day, and that is because we have a very huge network of supply chain that we've built over the years, connecting with small packers, small kabadiwalas and small balers in our system, and that is one of our competitive advantages of sourcing the right materials. The second competitive advantage is that we have is of operational efficiencies because the kind of process control that we are capable of that we have already set up, and and because of which we are delivering a very, very superior quality product and with a much lesser cost levels if we would compare it to any new player coming up. These are the two competitive advantages which will help us position ourselves much better than any other competitor.
Okay. Thank you.
Thank you. Next question is from the line of Akash Jain from Money Source Investments. Please go ahead.
Yeah, thank you. I have a few questions. One is on this. So clearly, this recycled polyester fiber business is a little bit of a commodity business, and margins are lower, and they're also dependent on the increase of demand and pricing in the global market. And even the ROC profile of that business is much lower than the new products that we are adding, which are more high margin and high ROC products. What we see is even in the recent expansion, we have added more capacity in RPSF. So can you please help me understand what is our strategy regarding recycled polyester fiber? Do we see that we will expand this part of the business also significantly? Because clearly, this is not as attractive a business as the new parts of the business that we have added now.
Yeah, for recycled plastic business, we are very much right. It is more of a commodity fiber. But going forward, as the understanding and as the necessity of the circular economy and recyclability, sustainability is creeping in, people are having the greater sense of responsibility towards the environment, and so the demand of recycled material is increasing, is growing. And so we are also having the approvals from some of the global brands for using the recycled PSF in their products. So number one, the trend is going to increase further, and we hope we would be able to sell more of the products to the brands here. We are getting the better pricing than the general commodity products. Number one. Number second, we are developing some more products, some value-added products like shortcut fiber, which we are pitching in the export market as well as in the domestic market where the margins are higher. Number three, we are going into the dyed PSF segment, rope dyed PSF segment, where the margins are really higher than the normal commodity products. So that's why, and in case of Warangal, we would be having some added advantage in the form of logistic input as well as output.
But are we looking at expanding this part of the business also in the future, or most of the new cases will happen in the higher margin rPET or filament yarn business?
Yes, of course. At present, we are looking for some value-added products. We are focusing on value-added products only.
One other question I had was, if you look at the difference between the margins for standalone and consolidated, is most of the difference because of the Nepal pricing and sourcing advantage, or there is also a little, because my understanding is the revenues from the filament yarn and the bottle is still very low. So is most of the benefit on consolidated margins coming because of from Nepal? Is it something I understand, I presume?
In fact, basically, you see, margins, EBITDA margins in terms of the percentage are higher because the sale has been knocked out. Some sale has been knocked out, and so the base has been quite low from the cross level. Number one. Number second, of course, there are some margins from the Nepal business and also some margins from the Warangal business also.
Okay. Thank you so much.
Requesting all the participants to please restrict to the questions per participant. Next question is from the line of Mitali from Concall 26 Capital. Please go ahead.
Hi. A quick follow-up from the previous participant. My question is regarding a recent order from Moon Beverages. How long did it take for us to onboard them as customers? You also alluded to it in talks with other potential customers. How long does it generally take to onboard them, in terms of completion of assessment and social audits?
So the usual period, Sonali, basically is around 10 months. So we've been working with Coca-Cola since 10 months now, since we first started, the approval process. So that is the usual time you would get with bigger brands like them.
Okay. Got it. And the next thing, I would like to know about the sourcing of scrap that we alluded to in before this question. How difficult is it to replicate the network with vendors and scrap dealers to source raw materials new competitors come in?
So basically, it's not just replication of the network. It's also about that having a relationship with those vendors. We have been operating in this industry since the past 30 years. We have a very good understanding and a very good relationship with most of our vendors, and that is because of which we are capable of scaling our sourcing operations as well, and that is the important part.
Okay. Follow up to that, if more competitors enter the space to increase capacity, do you think the processing spreads will see a declining trend going forward?
Sorry, could you repeat the question, please?
So we mentioned, right, like because of the government kicking in, we see margins increasing going forward. But if you competitors keep entering the space and increase capacity, do you think we'll see a declining trend in terms of realization?
No, actually because of the regulations, the demand is quite high, actually quite high. So we don't think that the supply side will catch up the demand in coming 4-5 years.
Okay. And just one last thing, you alluded in the presentation there was demand pressure due to Chinese dumping. So it's reasonable to assume that some of the supply has been pulled forward. How do you see demand trends for the next few quarters considering some inventory pile up in the industry?
In fact, the government of India has introduced the BIS standard for the yarn and fibers and the textile products. So some of has been implemented and some has been pushed for the next quarter. So with the implementation of BIS standard, certainly the dumping on the cheap Chinese material would stop.
Okay. I'll join the queue for follow-up. Thank you.
Thank you. Next follow-up is from the line of Dinesh Karia from Antique Stock Broking. Please go ahead.
Yes, thank you for the follow-up. So, earlier, there was a ban implemented by the government on import of pet bottle scrap and flakes as well. So, and we are using our Nepal facility to import pet flakes and feeding it in the North plant. So, are we at the mercy of government for optimum utilization of Nepal facility for our North plant, or can you explain that a little bit in detail?
Yeah, the pet flex which we are producing in Nepal plant is coming to our Indian plant, Ganesha Ecosphere.
Yeah, government can ban the import of pet flakes, right?
Actually, the pet flex quote is not freely available to everyone. It is just the 15% capacity, 15% of the production which we can import from the out of India in the form of pet flex, was pet flex. So it is under licensing.
Okay, so there is no cap of 15% of the production, right?
Yeah, it is cap of 15%.
Understood. Secondly, earlier you mentioned there is a lead time for getting the Starlinger machine. So, how much is the lead time now for the Starlinger machine that we order?
Prashant. Yeah, Prashant, are you there?
Yeah.
Yeah, please.
Can you repeat the question?
Yeah. So, we use Starlinger machines for making the finished products, and there was a good lead time we used to highlight earlier for import of those machines. So has the lead time gone down, or it remains elevated yet?
No, it remains at the same level because it is technology, and they have to get a lot of outsourced components from different partners, their own suppliers. And as well as they have to get some clarities and clarifications from EFSA also, European Food Safety Regulations. So the lead time is still at the same level.
If we plan to add additional capacity in FY2025, 6 months down the line, we won't be able to do that unless we have yet placed the orders for the machine.
So we are in discussion, and I think it is not the right time to discuss what has been planned for the future. Gopalji, you better discuss about this.
Yeah. We are discussing various options and capacity ramp up. But firstly, we were waiting for the rolling out of existing capacity, so which seems to be on track now, and by the fourth quarter we will be able to utilize the full capacity, production capacity. So now we are thinking it is the right time to move forward for the further capacity expansion, and we are discussing at board level. So we will come out with the exact plans once we decide.
No, it's great. And just one last question. If you can just help us with the broad-based capex numbers in case of brownfield and greenfield expansion. That's all from my end.
Yeah. So as we informed the exchanges, the second line which we are putting in, we are having all the infrastructure and civil work is there, and we are having all the utilities also. So the machine cost is there, which is around 3 crore for this brownfield expansion. And but for B2B plant, yes.
In case we put a B2B greenfield plant, what would have been the capex?
For the greenfield plant, it depends on the kind of washing infrastructure you are having with you. So if it is for the Chinese infrastructure, or it is a very advanced European infrastructure. So yeah, we are having the European machinery with us for the washing infrastructure, and for the similar kind of infrastructure with the European wash line and European B2B granule lines with a capacity of about 5,000 tons is about 225 to 250 crore.
Okay, sir. That's helpful, sir. Thank you and all the best.
Thank you very much. Ladies and gentlemen, we take this as the last question. Now hand the conference over to the management for closing comments.
Yeah. I would like to thank you everyone for joining us on this call. We hope we have been able to address all your queries. We thank you, Mr. Manish, for this call. Have a good day. Thank you.
Thank you very much. On behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.